Hi guys, welcome back to my video. My name is Tony and today I'm going to share another trading strategy with you. It's pretty simple. I don't want to overload you. However, if you're eager to keep learning and explore the world of trading more deeply, I invite you to join my free Telegram community. There you'll find tons of educational material, a variety of strategies, and all kinds of useful tips. It's a great place for beginners and I put a lot of time and effort into it. Join using the QR code on the screen or the link in the description. I hope you're enjoying what I do. Don't forget to give this video a like and leave a comment about what you liked or didn't like in this episode. Now, let's get into the strategy. In this video, we'll talk about using the Keltner channel and stochastic oscillator indicators. First, we'll add the stochastic and Keltner channel indicators to the chart. Then we'll adjust the Keltner channel settings to 24, 20 and 2 and click Save. Now we can see the indicator forms a specific channel. We'll leave the stochastic oscillator as is with no extra adjustments, and without waiting, we can already open a buy trade. Now, a few words about what the Keltner channel indicator actually is. It measures price volatility and helps identify whether market is experiencing sideways or clear trend movement. It provides three types of signals. First, a reversal signal when the price moves near the upper or lower bands, which makes a reversal more likely. Second, a trend confirmation signal when the price breaks through the upper or lower band, indicating a weak market direction. Third, a trend formation signal, which can occur when the price crosses the middle line, which is most often exponential. The stochastic oscillator shows basic things like overbought and oversold conditions. A key signal is when the line returns back into the channel. We entered a trade when the stochastic dropped below the 20 line and returned back into the range, while the Keltner channel showed the price near the edge of the bands. Now, we see an interesting situation. The price is trying to break the upper boundary of the channel. I'm confident the trend will go downward since the stochastic has stayed in the overbought zone for a long time. There is a crossover happening, but the price remains near the middle. I open a sell trade. Each candle shows wicks, which signals uncertainty. There was a breakout beyond the channel and we waited for a strong reaction before opening a downward trade. Based on the indicators, the stochastic had been in an overbought zone for quite a while. There was a small breakout, but the price stayed near the level. The trade closed and now we'll try to find the next signal. There's been a breakout beyond the Keltner channel. We need to wait for confirmation from the stochastic. If the stochastic is at the very bottom, that doesn't mean it will necessarily reverse and go up. In case of a breakout, the movement may continue for at least one candle outside the channel. We're watching how the candles form, and with this one, a return into the channel isn't happening. I see a well-formed downtrend, so I open a sell trade. The stochastic is very low, but that doesn't guarantee a reversal. The downward trend is clear. If you connect the highs, they're falling, and the lows are also dropping. That indicates a solid downtrend. Beyond the indicators, we also need to look at the overall market direction. It's always better to trade with the trend. If there is a trend, don't go against it. The indicator helps us if a trend exists or not. We wait for the trade to close. And yes, the trade closed. Excellent, let's move on. I noticed an interesting setup in the Australian dollar to Canadian dollar pair. There haven't been many breakouts beyond the channel, especially not through the upper band. That tells us that we may have a solid trend direction or that the price will return back into the channel. We pay attention to the stochastic in the overbought zone. We observe how the candles form. Candles have not just a body but wicks. The wicks give us extra insight into how the candle is forming. Let's see how this plays out on a 5-minute chart. On a 5-minute chart, there aren't many moments when the price moves beyond the upper band. So I've already set the expiration time a bit longer. It's clear to me that the price will break through the lower band. I open a sell trade and now I'm waiting for the expiration. In my view, 2 minutes should be enough for the price to return to the range. However, sometimes the situation unfolds differently. The stochastic, being a lagging indicator, can stay in the price zone for quite a while. Here the price broke out and then quickly returned, without going above the upper boundary of the Keltner channel. We wait for the trade to close. Perfect! That was the final trade for today. That's the essence of this strategy. I suggest you also check out other strategies on my channel. There are plenty and more are on the way. You're sure to find one that fits your trading style. And if you're just starting out and still figuring out the basics, just message me directly using the QR code or the link in the description. I have a small private group where I help beginners in my free time. We go through live examples and trading sessions together. It's completely free, but there aren't many spots left. So if you're serious about learning, send me a message now. Thanks for watching. Don't forget to leave a like and drop a comment. I read them all. Good luck and have a great day.